Hello everyone and welcome back to Options USA. Today we are diving into IBIT, the BlackRock Bitcoin ETF, and looking at a way to evolve the traditional cash secure put. Now I'm going to show you the booster strategy, which is perfect generating dollar income while take advantage of sideways or moderately bearish markets. This is a basic concept, but you must be very familiar with it to our upcoming strategies, and especially when we need to implement some type of hedge. So let's go step by step of this strategy. So why use a booster? Okay, I'm going to show what is a booster, but why use a booster is important. A booster is essentially a ratio put spread that results in a net credit. It carries a similar risk to a standard short put, but offers a turbocharged profit zone if the price drops slightly. So let's see when you earn and when you lose in this strategy. Well, let's say market outlook. If you really goes up, excellent, okay, not really good, but at least you keep the net credit received. Of course, much less than if you sell put. It's not really good, but okay. Sideways, that's great. The option expire, worthless, and you keep the credit, or maybe you can do a little bit more. This is where it goes really nice. Moderate drop, optimal. This is the sweet spot where you are hit maximum profit. Strong crash. Oh, that's a problem, okay? Because then you have to buy the bid because you have one short put. So you're going to manage you end up owning the shares at a discount cost base. Probably much more discount than if you just sell put. Of course, much more discount because this is the best. But if it really goes down, at least you buy much less than just selling a put. It's better, yeah, because it's horrible when it really goes down and just the you just got the premium of the put. This is you get a little bit better, okay, 50% better premiums at the lower price. So now pay attention step by step. I'm going to show you two options to do this booster. Option A, the aggressive, the $50 target boost. That's the IBIT was $49.85. So it's very ATM. You buy one put, okay? You buy one put, strike $55. $55 for February 2026, like 50 days. But then you sell two puts, strike $50. Of course, if it really goes down, you are shorting one put. You have to buy. Yeah, but with a lower price. The result, you receive a net credit of $15. So you receive a little bit, $15, not a lot, okay, but you receive. And if you stay like $51, you receive more $400. That's great. That's how to look this strategy on the screen. Okay, you got 15 cents, and your break even is $44.85. You have the chance, the probability of profit 72%. If you just sold the put, your profit is your probability of profit will be 60, 58%, it depends. Okay, 60%, 58%. So this is much better, 72%. And you receive, okay, 0.15 cents, nothing. But if the Bitcoin doesn't really goes up, you make money. Okay, 44.85 to $55, $50 between $50 to $55, you make more money. Okay, if it goes a little bit down, of course, goes to $47, you make more money. $46, you make more money. $48, you make more money. Not just this 15 cents. If it goes above $55, then just 15 cents. But it's okay. It's not very common. Goes up 10%. So you're okay in this case. This is how it looks. The profit, okay. Till here is zero, like 44. You can make here's like $400 to $500. It's kind use some reasonable chance to make like $400. Of course, if you're lucky, you can make $500. Depends of changes volatility. You can make like $400 in 30 days, 20 days. Depends of how changes the volatility. But it's more protection than sell just a put. It's way more protection. Why? Because your break-even point for just one put goes really down. Okay, it goes to 40 for less than $45. If you just sold the put, it will be like 46 $46.50. So it's almost $2 less of break-even point. And of course, you can make a little bit more money if it goes in the sweet spot. That will be like 49 to $52 to be the sweet spot. You'll make more money than just short a put with more security. Yeah, that's what you have to manage, more security. And this is perfect when it really goes up, you can always do that. It's a great hedge for the future. So try to remember this, get your notes, and if you're liking this video, press the like button and of course subscribe in the channel. And now the plan B. This is for people who are like, okay, I don't like a lot of Bitcoins, but if really goes down, I'll buy Bitcoin. So this is more secure. And in the meantime, if it goes down or if it goes up, you make a little bit credit. And if it goes just a little bit down, you make great credit, okay? I'll show you the plan B. Just can you have the break-even point even lower, so the chance that you make profit is great. But if you think it just goes a little bit down in these next 50 days, you can do this so you make more money. Of course, you have to buy if it really goes down, but in a price that is much lower than when you just sell puts. So option B, the latter conservative booster. So Bitcoins like IBIT was like 49, strike $49. So I buy one put, strike $50, ATM. And now I sell one put, strike $47, and one put, strike $45. I was looking for selling two puts for strike $45, but I would pay, so I don't want to pay because if it goes up, I would lose money. The result, the result to receive a net credit of $17 upfront, and this is much safer than just sell a put of $50 or even sell a put of $47. Sometimes it's safe, okay? Because you have this buy, you help a lot. So what's the probability? The break-even point, $41.81. The probability of profit is 84%. So just in 16% of cases, you lose money. And it's really good. And it's not like you lose money. You have to buy the stock, the ETF, EBIT, the Bitcoin, of $41.81. And it's like almost 20% of 15, 17% of drop. Okay, you buy and then you just sell a call. Oh, more money. Your break even is going to go to $38. That's how you make money. That's how you make money on IBIT, okay, or in ETFs that it's not really common, goes down 40 or 50%, but has volatility. Okay, of course, there's one time you lose money, but that's it. The problem is the maximum return. You won't make that much money. You make maximum $317, but it's not that bad because you make money if the Bitcoin goes between 45 to 47. Okay, that then you make maximum return $317. I will show you. So goes stays there, you make more money. Of course, you make money 49, 48, more than just the net credit on 47, 46, on 45, on 44, on 43, on 42. You until 42 you make more money than this 17 cents. Great. Here's the target, okay? Stay 45 to $50. You make this to 47, of course. $2 you make the sweet spot. $317, not that easy, yeah, but sometimes happens. So you make like 8%. But the great thing is if it really goes down, your break-even point. So if you sometimes some people say, oh, if Bitcoins go to $42, I'll buy one. Of course, let's say $70,000. That would be the price here. If it goes to ETF, if it goes below $42, I will buy one. So you can do that, okay? Easily, you can do, or you can sell a put for $42 and make just a little bit. But this is you have more chance to premiums. Yeah, you can earn more money because the selling a $42, you make you, I don't know, 50 cents. Here you can make $3. Yeah, if it goes in the sweet spot, $3 is much better than 50 cents. Of course, if it really goes up, you just make 17 cents times 100. Yeah. So that's great. Yeah, I believe that's better way to do. Don't just sell puts. At least do this booster with puts. Okay, that's the strategy. So why am I showing you this strategy? Because as a professional in administrator, I just value strategies that improve or my enterprise and lower my cost basis much more than just short a put. And of course, if you find this breakdown helpful, please hit the like button and subscribe to Options USA for much more advanced US derivatives strategies. And of course, I'm showing you a lot of types of strategies that you can see in my channel. And if you like, you are welcome to comment, to ask for opinions. I will try to do my best. Thank you and have good investments.